Good evening and welcome to this tutorial. In this tutorial, you will learn bank reconciliation statements and how to solve problems involving bank reconciliation statements. Without wasting time, grab your writing material and let's dive in. Now, when we talk of bank reconciliation statements, we are referring to reconciliation between the cash book and the bank statements. What is the cash book? The cash book is the book of prime entries where all transactions pertaining to cash transactions are recorded. And the cash book is a journal and it is also a ledger. And that means that the cash book is a subsidiary book of accounts and it is also a principal book of accounts. There are three types of cash book. We have the single column cash book. That one consists of only the cash column. And we have the double column cash book, and that one is made up of the cash column and the bank column. And the third one, we have the three column cash book, which is made up of the cash column, the bank column, and the discount column. In this tutorial, anytime we mention cash book, we are referring to the bank column. The bank column of the cash book is a column where every bank transaction is recorded. For instance, when money is lodged into the bank, it will be recorded on the debit side of the cash book. When I say the cash book, the bank column of the cash book. And when check is issued out for payment, it will also be recorded on the credit side of the cash book. That is to say that the cash book is an example of an asset account that take increase in the debit side and decrease by the credit side. Now, what type of account is the bank statement? The bank, on the other hand, is keeping a liability account. All money deposited into the bank is a liability to the bank. Because of that, they keep liability accounts. That is to say, when money is lodged into the bank, it will be recorded in the cash book on the debit side, because the cash book increases by the debit side, and the bank will record such transaction in their book, in the bank statement, on the credit side, because it is a liability account and the increase in liability is recorded on the credit side. And when money is paid out, it will be recorded on the cash book at the credit side. And when in the bank, it will be recorded on the debit side. That is to say, the cash book kept by the customer is a current asset, which is a current asset, while the book kept in the bank for the customer is a liability account. That is to say that every transaction that is recorded on the debit side of the cash book is traceable to the credit side of the bank statements. I repeat, all transactions recorded on the debit side of the cash book is traceable to the credit side of the bank statements. And every transaction that is recorded on the credit side of the cash book is traceable to the debit side of the bank statement. That point should be properly noted. Now, let's proceed. Want to take it? Those of you that want to take down this note, I bring this place so that you can jot down a very clean note. Now, we're talking about what I've just explained now is the cash book versus the bank statement. The cash book is prepared by the business, that is the customer's record. The cash book is a customer's record. It shows the business record of cash and bank transaction. It shows the business record of cash and bank transaction. That is, it shows the receipt of cash and the payment of cash. That is what the cash book. How is entry made there? On the debit side, money received is recorded. On the credit side, money paid is recorded. That is what the cash book. Then the bank statement. The bank statement is prepared by the bank. It is the bank record. It shows the bank record of customers' account transaction. How is the bank statement recorded? On the debit side, money paid out is recorded. Money paid out by the customer is recorded. That is the debit side is the reducing side. Then the credit side, money received by the customer is recorded. That is, increase is recorded at the credit side, while decrease is recorded by the debit side. Now, a very important point here I've just mentioned is that all debit transactions, all money are received, paid into the bank, all money paid into the bank, and that is all transactions on the debit side of the cash book are traceable to the credit side of the bank statement, and vice versa. Let's go ahead. Now, what is bank reconciliation statement? A bank reconciliation statement is a report that explains the difference between the balance shown in the cash book and the balance shown in the bank statement. Why the difference? Why the difference between the cash book and the bank statement? Why the difference in the balances, or in the balance of the cash book and the balance of what the bank statement? There are four major reasons why this difference occur. The first one is the presence of what unpresented cheques. That is, check issued but not yet what presented. That is one. Two are the presence of uncredited check. Uncredited checks are check deposit not yet cleared. The next one is bank charges. Bank give charges to some of the services like SMS alert charge, charges on loan, so many charges the bank charge the customer without informing them or without giving them alerts. Okay, then the fourth one is direct debit and direct credit. While the last one is error. That is the last one, number 5 there is errors. Now, differences usually occur because of timing issues or error. For example, a check may be issued but not yet presented, or deposit may take time to clear. Bank also record charges or interest directly. And these are the reasons why the balance of the cash book may differ from the balance of the bank statements. Now we are going to examine these 5 items critically, because that is the silent point in they are the silent point in a bank reconciliation. So we are going to examine them one after the other. What is unpresented checks? What are the example? What are the uncredited checks? What are the example? When we say bank charges, how do they look like? When we say direct debit and direct credit, what are they? And when we mean bank error, what comprises these bank errors? That's what we are going to look up next. Now, the first one on the line is unpresented checks. And these are checks issued, that is, checks that have been written by the business and recorded in the cash book, but the payee has not yet presented them to the bank for payment. And the bearer of the check still retain it. He has not gone to bank to present it to the bank for them to pay him. The business has issued this check to him, but he has not gone to bank for reason best known to him. Now, what is the effect of presented check? This is the effect. They reduce the bank balance in the cash book. Yes, because in the cash book, immediately the check is issued out, they will record it that it's a particular amount of money have been paid, but yet to be reduced in the bank statement because it has not been presented to the bank. Example of unpresented check. A check of 50,000 issued to supplier a day, still not presented at the end of the month. There are about 5 examples. You can go through them. Then we come to this last point. How do we treat unpresented check? Unpresented checks are treated in the reconciliation segment of bank reconciliation. No, the bank reconciliation statement, our workings with the bank reconciliation statement comprises 2 sections. The first section is the adjusting the cash book for correction of error. And the second segment is what? The reconciliation segment. Unpresented checks are treated in the reconciliation segment. Unpresented check has nothing to do with the adjustment of the cash book. Now, let's go further. Then uncredited checks. If you don't call them uncredited checks, you call them deposit in transit. Deposit in transit. So when you hear deposit in transit, it means the same thing as uncredited check. These are checks received from customer and recorded in the cash book, but the bank has not yet cleared or credited them. Yes, we have issued check to we have paid some check into the bank, and we have recorded it in the cash book under the increase side that check has been paid into the account. But because of the time or clearance problem, the bank has not credited that check into our accounts. What is the effect? The effect is that it has increased the cash book, but it has not increased the receiving side, which is the credit side of the bank statement. The increased cash book balance, but not yet in the bank statement what balance. Example of an uncredited check is customer Tunde paid 100,000, check lodged on 30th, yes, but not yet cleared by the bank for to be credited into the account. Yes, customer paid 100,000 check into the account, take it to the bank, and because of the clearing system, the bank is delaying to credit that check into the account. Already, it has been recorded in the cash book under the debit side, by the debit side, that Tunde has paid, but the bank is yet to clear the check. Now, there are also other example here, but the major thing here too is how did you treat uncredited check? Uncredited checks are treated under reconciliation segment. Uncredited checks has nothing to do in the adjustment of the cash book. That should be also be taken proper cognizance of. Then the next thing we are going to take a look at, the direct debit, the direct credit, and we'll also look at the errors. Now, the direct debits. These are payments made by the bank on behalf of the business. Yes. At times, the business gives some standing order to the bank that so part of the year, so part of the month, pays so customer. And that is what we call standing order. At times, they pay directly to our customer utility bills, insurance premium, that the business has not yet entered into the cash. Yes, this money are paid by the bank directly, and most of the time when this money are paid, the business are not aware, and so have not entered them into the credit side of the cash book. Such is what is called the direct or debit, money paid out from the business account in the bank direct to customer on the order of what the customer. Example is standing order, utility bills, and etc. What is the effect? The effect is that the bank has reduced. The credit side of the bank has reduced, and the debit side of the cash book has not reduced. The effect reduces bank statement balance, but not yet in the cash book. This one is to be adjusted in the adjustment section of the cash book. Now, example, when 10,000 bank charge deducted, 15,000 electricity bill debited directly, 25,000 insurance premium deducted, 50,000 loan repayment taken directly from account, and the fifth one, 5,000 SMS alert maintenance charge, and etc. There are so many. There's COT, there's VAT, there are so many other charges, there is FIMS charges, and so on and so forth. But where did you treat this one? Treatment, how do you treat these direct charges? Must be entered in the adjusted cash book. It is to be adjusted in the adjusted cash book. And where is it going to enter in the cash book? In the adjusted cash book is going to the credit side. So all direct debit transaction from the bank will go to the credit side of the cash book. Now, direct credits. These are amounts deposited directly into the business bank account, often by customer or other sources, but not yet recorded in the cash book. Yes. At times when money is paid by the customer of the business, a commission, a dividend paid directly into the bank, and the customer may not have alerts that such amount of money has been paid into his account. And so the bank account has been credited directly, and such transaction has not been entered into what at the debit side of the cash book. The effect is that increase in the balances of the bank statement will increase, but the cash book balances will not increase because no entry has been made, because they are not on the knowing of the direct credit that enter in directly in the bank. Now, example of this is customer paid 200,000 naira directly into the business bank accounts. Another one, 550,000 interest income credited by bank. A 300 loan proceed credited by the lender. 20,000 refund paid directly into the bank by supplier. 15,000 dividend credited to the business account. This example is important. These are the things you are going to see in the question when we begin to solve questions. So you need to know them. Now, what is a treatment? Direct debit are treated in the adjusted accounts. In the adjustment of the account, the direct credit are adjusted there. And where are they going? The direct debits being increased in the bank statement balance must go to the increasing side of the cash book. This will go to the debit side of the cash book as an equivalent increase in the cash book balance. And direct debits and direct credit has nothing to do in the reconciliation section of reconciliation accounts. They are to be adjusted in the cash book. Now, error. Now, error can be treated in the adjusted cash book and can also be treated in the reconciliation error, depending on the type of error. Now, if it is error that was made in the cash book, it will be treated in the in the cash book adjustments. But if it is error that is made by the bank, that error will be treated in the reconciliation segments. Is that point clear? Let me repeat it. Errors may be two. There are two types of error in bank reconciliation. The error that is made in the cash book and the error that is made in the bank statement. Error that affects the cash book or that is committed in the cash book will be adjusted when adjusting the cash book in the cash book, while error made by the bank will be treated under the reconciliation segment. Error may be error of undercast or error of overcast or transpose error or error of principle. Whatever it is, the nature of the error determine whether it will be treated in the cash book or the reconciliation segments. Now, let us proceed. We are going to take a summary of what we have just done now. The summary is that uncredited checks are treated under what reconciliation statements, and uncredited checks also, unpresented check are treated under the reconciliation segment. Then uncredited checks also reconciliation segment. Then direct debit, direct credit are treated in the adjusted cash book, while error are treated under the reconciliation statement, under reconciliation, and also they are also treated under what the adjusted cash book, depending whether the error is in the cash book or the error is made by what? The bank. If the error is made by the customer in the cash book, then the adjustment during the adjustment of the cash book, it will be corrected there. And if it is made by the bank, it will be corrected in the bank reconciliation section. Now let us go ahead. Now this is the format of the bank reconciliation. The first stage there is what are we reconciling? If you can see the screen now, you see reconciliation figure. You have to bring back what you are reconciling first. This time around we are reconciling the bank balance with the cash balance. So reconciliation figure must come back first. Then in this case we are beginning our reconciliation with what? Balance as per cash book. This is the figure we are reconciling. We are reconciling the cash book with what? The bank balance. And so this is the format. The format says balance as per cash book, add unpresented check, less uncredited check. And if you are correct in what you are doing, you are going to get the same balance you have in the adjusted cash book as the same balance in the bank statements. Now you can start reconciliation from the bank also. We want to start reconciliation from the bank. Then you first of all bring out the balance in the cash book. That is the reconciliation figure. Reconciliation figure now is cash book balance. This is what we are going to reconcile. And you begin now by saying balance as per bank statement. Then this time you add uncredited check, then less unpresented check. So if everything is okay and everything is correct, you are going to arrive at the balance as per the cash book. Now we are going to take some examples. Let us take some example. We have explained so much. Now let us take an example. Now this is example 1. Example 1. Example 1 says, the bank statement of Mr. John Brown for the month of September 2024. Okay, you say no. You say below. I'm sorry for that distortion. Below is the extract of the cash book, bank column only, and the bank statement of Mr. John Brown for the month of September 2024. Prepare a bank reconciliation statement as at 30th September 2024. Lest I forget, there are 4 ways of asking questions under the bank reconciliation. The first way or the first question type is to produce the cash book and to produce the bank statement, and they will ask you to do the reconciliation as the case of this example. Now, another type of question that they will give you the balance of the cash book and the balance of the bank statement and other information for you to do the reconciliation. That is the second type. The third type, they will give you the balance of the cash book without giving you the balance of the bank statement and give you other information for you to do the reconciliation. And the last type is they will give you the balance of the bank statement. They will not give you the balance of the cash book, and they will give you other information for you to do a reconciliation. So the first type of question is a cash book is produced, cash book of the business is produced, a bank statement of the business is produced. Now we are going to do a reconciliation. Now, what we first of all do here, this is the bank statement, the cash book, and this is the bank statement. Do not forget that all debit entry in the cash book, that is increase in the cash book, are traceable to the credit side of the bank statements. That is to say, all the entry in this side, and this side, and this side, let me say this side of the accounts, all the entry in this side are traceable. That's all the entry in the debit side of the cash book are traceable to the credit side of the bank statement. That is, all check that is deposited are traceable at the credit side of the balance, of the bank statement. So that is the first assignment we are going to do. So what we are going to do now, we are going to check all these transactions. Balance brought forward 286, Olumbo and the rest of them. We are going to check and try to tally them with the credit side of the cash of the bank statement. Any of these checks or of this transaction that is in the cash book and is not found on the credit side of the bank statement is now unpresented check, because this check here have been issued, so it's supposed to be by the credit side of the balance of a bank balance. But if anyone is not there, that one is now unpresented check. So let us see. 55 is there. 55 is there. Good. 120 is there. 120. Then which other one is there? 73 is there. 73 is there also. Then 57 is there. 57 is there also. Now another one, 60 is there. That is Toko, and 60 here. Toko is here also. Then let's go. What next? Nene is here. Nene is not here. So the first unpresented check is what? Nene. The next one, Duke is here. Duke is not on the credit side. So we have two unpresented check in this question. So the unpresented check are uncredited checks. Uncredited checks are Nene, which is 223, and Duke, which is what? 79. There's a mix up there. All the transactions that are in the debit side of the cash book and are not found on the credit side of the bank statement are uncredited word checks. So in this question, we have two uncredited checks, which is what? Nene 23 and Duke 79. Now let us go and trace the other side. Now we are going to trace the debit side of the cash book with the credit side of the cash book against the debit side of what? The bank statement. And every transaction that is in the credit side that are not found on the debit side of the bank statement are represent what? Unpresented check. So let us go and trace them. Now we have 53 there. The first one is 53. 53 is there. Then the next one there is 42, franc. 42 is there, franc also. Then the next one is 80, that is Sef. Sef 80 is there. Then the next one is 48, that is Larry. Larry is there, 48. Then the next one is Elias. Elias is 26. Under the debit side, we have Elias. Elias is there, 26 also. Elias is there. Elias is 26. Then we go again. After Elias, what we have? We have Ade. Ade is 28. Do we have Ade by the debit side? No, Ade is not by the debit side. So that is one of what? The unpresented word check. So Ade is one of the unpresented word check. Now let's go further. We have, after Ade, we have wages, 150. Is wages there? 150 is there. Then what else do we have? Haru is 85. Is Haru there? No, Haru is not here. So we have gotten another unpresented check, which is what? Haru. So the unpresented check here in this question are two. Ade 28, then Haru 85. Now, what we are going to do, this unpresented check and uncredited check has nothing to do with the adjusted word cash book. So what we are going to take a look at, is there any debit entry, direct debit or direct credit? That is what we are going to adjust in, the cash book. So let us check whether there's any direct credits. You will get the direct credit, every column, all item in the credit side of the bank statement that are not found in the debit side of the cash book may be what? Direct what? Credit. Let us go ahead. Okay. 55. There is no direct debit. Now let us check the other side. All items on the debit side of, the debit side of a bank balance that are not found in the credit side of the cash book are direct and direct toward debits. Let us go. I'm seeing bank order there. I'm seeing interest charged. Yes. And on the credit side, I'm seeing building society. So that is to say, we have one direct credit. Direct credits. And two direct debits. The two direct debit is standing order 10 and interest charged. And the direct credit is building society. So let us go. So in this question now, we have gotten direct credit building society, which is 50, then direct debit standing order 10, and bank charges, which is 12. Now remember, the bank balance is 430 on the credit, and the cash balance is 391 as shown in the balances of the bank statement. 430 credit, and the balances of the bank statement, the cash book, 391. So with this now, we can go and do our reconciliation, our adjustment and reconciliation. Let's go. Now, this is the reconciliation. The question is John Brown. John Brown Limited, adjusted cash book. Now we have the bank balance, the cash book balance as which is 391. That is the balance from the cash book. 391. Now what we need to bring here, we need to bring the credits, direct credits. The direct credit, we bring it here. The direct credit building society. Anything about direct credits or direct credits will be taken toward the debit side. Building society is direct credit, and the next thing again is standing order, which is debit. Debit in the bank statement, we go to the credit of the cash, adjusted cash book. Then the next thing again is bank charges, which is 12. I think these are the only thing we needed in the adjustment. The only thing we needed in the adjustment is direct debit, direct credits. And if there's error that's affecting the cash book, that is all. So when we now get balance brought down as 419. So the balance adjusted cash book balance is 419. So this is what we are going to use to work. Total balance now becomes 441 and 441. Then we balance off and bring down balance carried down. Balance carried down now become balance brought down, which is equals to 419. Balance brought down is now 419. This is the balance of the adjusted cash book. Now this balance now is what we are going to use to do the reconciliation. So bank reconciliation statement. Now we are going to begin with the balances from the cash book. And if we are beginning from the balances from the cash book, Okay? Yes, that means we have to write down the reconciliation figure. We are reconciling with bank balance, which is 430. Yes, that is what we are going to reconcile. And we are beginning from the bank cash book balance. Adjusted cash book balance is 419. Then what are we going to add? Add unpresented check. Unpresented check there are two, which is what 113. Then what you do? You less uncredited check. These uncredited checks are 102. 419 plus 113 minus 102 will give you what? We give you 430. You see, it has 430 is the balance of the bank, and 430 is now at the balance of the cash For by this, the bank statement, the bank and the cash said to have been what? Reconciled. On this note, we are going to we come to the end of this tutorial. We don't want this tutorial to be too bulky. In our next tutorial, which is going to be bank reconciliation part 2, we are going to solve various type of example. The other 3 type of example that have not been solved. I mentioned there are 3 types of questions that we set in bank reconciliation. We just solved only one. In our next tutorial, which is going to be a bank reconciliation part 2, we are going to concentrate on solving questions that will include all type of questions that can be set on bank reconciliation statements. On this note, we say bye-bye. If this tutorial has in any way impacted any knowledge in you, assist us to share the tutorial and like the tutorial and subscribe to our channel. Thank you.